Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, my thoughts on the market. So let's get into today's stuff. Let's do another report. So Monday's economic data, I always start off with that. Chicago PMI 47.6, so this basically means, let's go up, Chicago Business Barometer. But yeah, contracted, and this for the 16th straight month. Smaller increases in employment, order backlogs, and new orders. So that's, but that is better than expected, so that could be good for the market. Of course, the new manufacturing economy that Trump promised, Dallas manufacturing down 16.3. So looks like, I mean, maybe we'll get manufacturing back, but it won't be this president, and it certainly won't be the next one that follows. So maybe in the 30s, like the mid 30s. I don't know. Hopefully we'll get it back one day, but not anytime soon. Dallas Fed manufacturing declined 16.3. Way worse than last time, so. So there it is. Market stuff today. I finally found something that actually does during the week, but see gold right here, that's up $38. They blamed the tariffs and uncertainty and everything. I think that's part of it. And 3,000 was my target. Blew past that. I thought it would correct some, but we'll see. I hope it corrects some just because if it keeps just going up like that, the higher it goes, the longer it goes, the longer the correction will be. So, but let's just look at the Huey real quick. The Huey index. Let's go look at the Huey. That's the gold bug index. Yeah, see, if you look at that, that's 1.2, it's 0.33%. Meanwhile, gold, look at GLD. Look at that, 1.44. So, yeah, 0.33%. GLD up 1.44. So gold is really outperformed. Gold had a big day, $40 up. And one technician that I follow, I don't know what they say. They say 290 is probably going to be a hard top. I don't know. I do think it's due for some sort of pullback. And well, I mean, it's not pulling back at all. It's just going up. So, and I think it could be, maybe it goes up to 33, 3,400, then just bases for you know, 3, 4 months at 3,000, then makes its final move. I don't think this is the final move, but I could be wrong. And as said with the Huey, I have a target there. I have a silver target, which I wanted. I think silver will reach around 50. But if you look at the Huey, it's going to be around up here, 500. So it's going to be right around here, 500. That's sort of my top target, and then it'll probably be a year to 5 year. Looking at the markets today, it looks like that bounce continues. As I said, they were due for a bounce. Just looking at it, it's really come down, and it's still. I mean, looking at 6 month, it's still down on the 6 month basis. Year to date, still down 1.28. Let's look at the CNN fear index, CNN, and just when you have sentiment this irrational and this feared, like here, extreme fear. They're due for some bounces. I don't think another big decline will come until it's at neutral or greed. And that's what I like the CNN fear index, fear and greed index. I think that's a good one. Let's get the JM bullion, gold and silver, fear and greed index. Let's look at that. I actually do like that. We'll start adding that to my videos. Look at this. This is the thing about gold. Extreme greed right here. There's due for some sort of pullback. I don't know exactly what it is, but yeah, I know how to buy gold. But yeah, extreme. I'm glad some of these extreme greed due for something. So th there it is. Gold. I mean, I don't think this is the end, but I think I mean, it's made quite a move. Like 33, 34, 33 to 40% of its gains. Just period. Have come recently, all within a year or so. Let's just look in today's stuff. A little bit of the markets, then I'll do AI infrastructure stocks fall as Microsoft scraps some of its data center plans. Remember when they said AI was supposed to be like some great panacea? Uh, this is Look at this. Pullback on new capacity leasing was Microsoft, largely driven by decisions not to support incremental open AI training workloads. So we kept hearing all last year, 2023, AI is a panacea. And I mean, this was a couple of days ago, and I just had some personal things I had to do and get rid of. Not good. So here you can see the AI is falling apart. So, and then look at this. This is one thing that I sort of looked at. I found this on LinkedIn, so I just copied and pasted it. The restart of student loan payments following years of pandemic-related freezes has been rough. About 13% of the borrowers are at least 90 days late on their payments, up from 8.4% at the start of 2020, according to credit reporting TransUnion. Some point to a lack of budgeting experience among borrowers, but borrowers themselves point to overall chaos, saying loan service aren't commuting or making errors, and they point to Trump era education disruptions as an aggravator. Now, this student loan crisis is an absolute uh, terror. I don't know uh, what's going to happen, but this is bad, and I don't know exactly how this is going to play out. I wouldn't be surprised if uh, people just left the country completely. I don't know how it work tracks overseas. America is going to weaken over the next 10 or 15 years, so the days of it being able to like bully and strong arm other countries are over. So that will be an interesting thing on how things play out in terms of debt. I just know this. I had family members, none of them they're by marriage, but they're not American. And they came over here and now they're out of debt, but they got caught up in the debt train. That is America. This is a problem that no one wants to solve, and they're not going to. They feel it's lower interest rates, not a. So anyway, and the other thing about bringing back manufacturing, our biggest car company, Tesla, well, who's going to buy it? Like you can make something, but it has to actually be bought. Two-thirds of Americans now say they won't drive a Tesla. I'm not going to go into why, but two-thirds won't. And this is America. This isn't even talking about overseas. I'll tell you this, the overseas hate them more than Americans. Overseas, they hate us more than the Americans. And it's not just Germany. Yeah. Eastern Europe hates them. I could just say that from family. So I'll tell you this: who's going to buy them? We can make all the cars one, but if no one's going to buy them, what's the point? Is it going to really help our trade deficit? No. Is it going to help? Yeah. So anyway, that's another thing people forget. If you want a manufacturing base, you actually have to make things people want. No one wants a Tesla. So let's go to US housing market. So we're gonna keep going, reporting as is. US market looks a lot like 2008 bubble, real analyst says. I pointed this out last week, so I don't remember reading it. Home prices stubbornly high. Mortgage rates keep American buyers on the sidelines. Mortgage rates are coming down now, as we've been following on this channel, so that's why the pending home sales have actually gone up. So Florida and Texas, they're basically struggling to offload their properties. So that's the other thing. The South is where it's really going to go. Well, it's going to go throughout the country, but the South, that's where it's going to start. Florida, Texas, Tennessee, that's where it's going to go. So there is affordability crisis. They talk about low inventory levels. I think that's sort of BS. I think that's more of a, oh yeah, this guy. I know it's beginning to look a lot like '08, at least for home builders. Took a picture of this outside. New home zero down. Look at that. That ended well last time, didn't it? I think it did. So, so yeah, that's pretty much it. You can see the housing bubble, home prices are starting to cut, and you're starting to see it in Florida and Texas and everything. In terms of, cars, I mean, Tesla's the biggest car company, but that's market cap. It's not actually by manufacturing, but Ford, Chevy, I think the big three automakers, they prefer to make them overseas. They're the biggest manufacturing in the US so far, but that's the thing. I'm going to cover more of this, but a lot of countries are now refusing to buy American goods. Why? Because of nationalism. We're criticizing our allies. They don't want to buy from us anymore. They don't want the proceeds to go to America. So our exports, they're really going to tank. And this is what people don't understand. Among Western nations, nationalism is rising again. And you have to take that into effect with economics. If you don't, you're not going to have sound policy. So anyway, don't expect Canada. They're not buying. They even say it. We're not buying U.S. bourbon. They literally said buy Canadian. And, I covered it. The pizza shops, they're no longer buying the tomatoes from California. They're buying them from Italy. And I mean, if they actually get their pipeline legislation and tell the radical environmentalists, screw off, and they build those pipelines into British Columbia and Western Canada, so they export to Asia and Europe, they're not even need the US. So we're going to see, I mean, the big four, which are the auto loan, not accounting, but the auto loan bubble, that's coming to crisis. Commercial real estate's there, but I haven't seen too much about it. I think the return to offices and everything like that is really put that on the back burner. But the auto loans coming up, you see starts with Florida, Texas, parts of the South, the housing bubble starting to crumble. And not just that, what's the other one? The housing market, credit card. I mean, you're seeing, but most of them, and that's why I think the stock market really isn't going around. That's why the CFOs are pessimistic. They see all that stuff. I've covered that. That's why the CFOs are pessimistic. This is why. I mean, now has it fully blown? But this is what I didn't talk about too. Is the Nasdaq, even though the S&P was up 30 and the Dow Jones up 400, the Nasdaq was down 23 today. Tech is in a lot of trouble, and they're going to have, and what drove the stock market? The big AI boom. The big AI boom. That's all they talked about. So, you see the stat, you see it there. So, US economic data you saw, Chicago PMI, they can't even pretend there's a recovery. You hardly see, you follow this channel, you hardly see expansions anymore. So, anyway, that's all I have. Hit that like button, subscribe. As you know, we're gonna be covering this. A lot of problems. I don't really know what else to say. Just my opinion, stock market due for a bounce could continue. I think there'll be a big, massive money printing monetary stimulus. We're headed for a recession though. And gold, I mean, it's due for a sideways type correction. I said it can even have a couple ways and just go down hard and fast and go down 300 to 400 to 500, which is actually reasonable now. Or it could go to, or it can just go down a couple of hundred points, to 28, 2900, and then make its next leg. Or it can just go sideways for 6 months, for a while and not do much. So, but anyway, that's all I have. Hit that like button, subscribe. We'll keep doing the we'll keep I'll keep letting you know what I'm doing and everything else, and hit that like button, and I'll see you next video. And remember, disclaimer, not financial advice.